This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. I'm giving you a stock market update as of Thursday's close for Friday morning. So we've had a really strong push to the upside. And, if you read out there, there's a lot of people thinking this is just a last gasp bear market rally, getting ready to get killed. And then you've got others saying that this is the sort of something meaningful to the upside. Let's delve into this and see if it's either one of those situations. I kind of fall in the camp that it's neither one. I think the bias is to the upside now, but I don't know that you can call this something significant in terms of trending yet. So let's go ahead and before I get into the analysis, just if you have an interest in learning more about my methodology, I would go to rabilstockresearch.com/book. And I'm offering my book at a discount right now in an ebook format. So if you have an interest in learning more about MACD and ADX in multiple timeframes, along with price structure and how to use moving averages in this way, it's worth a look. All right, let's go ahead and get going. And I want to start with the market conditions like I always do. And I'm going to look at the sentiment. So here's what's going on. The sentiment hasn't really changed that much. It pushed up a little bit more. So this was last week. This is the difference between the bulls and the bears. It's a sentiment survey done by Investors Intelligence. And last week it was at 25. This week it's at 28. So it has pushed up some. That means there's 28% more bulls than bears. Now, just to give you a perspective, I would say when you get up over 30, the risk starts to increase a little bit. But really, you're looking for the true danger signs are when the difference between the two is up around 35 to 45%. So that's kind of what we're on the lookout for now. We're kind of caught in neutral. Now, if it makes a big jump one way or another in 1 week, so it went from 28 down to 17 and then back up to 25 in a 2-week period. So it had a big drop, which was a bullish sign because everyone turned, a lot of the bulls dropped off, and then it jumped right back up. And so it kind of neutralized that pretty quickly. So we're back into the neutral camp here. We're going to need to see an extreme reading, get people throwing in the towel and everybody turning bullish would be the next signal I'd be on the lookout for. And the reason I would say that is because now we're up to 69% in the overbought oversold oscillator for the weekly chart. Weekly RSI 5 is up at it was down at like 18. So I mentioned this 2 or 3 weeks ago. We got down oversold on both the daily RSI 5 and the weekly. We're way overdone to the downside. It was somewhat inevitable that we were going to get some kind of a bounce. It turned into a really dynamic rally where people turned bearish we found out they turned bearish after the low, but the reality was they turned bearish right at the bottom. And I think the cash levels also moved up some. So that is really helping this whole drive to the upside. And the reason why I think the bias has switched, and it's done it very carefully. Very quickly. So we're up at 69%. Now we're overbought in both of these. Now, not at the extreme that we were oversold. But when we go from oversold to overbought that quickly, it's actually not a negative. It's a sign of strength. It's a sign of true buying. So I'm of the belief that, yes, this could pull back. This could consolidate a little bit to work off this overbought condition. But I think the bias is up, especially this time of the year. We're in the middle of November. There's just not that much time left to the year. I would say, if they were going to break it down, they were going to break it down here. Now, I would think that the bias is up at least into the end of the year. That's kind of where I'm leaning right now. Now, part of the reason why I'm thinking that is what's going on with the volatility. So both of these are neutral right now, but you know what? I really should have switched this one to positive, all right? Because this is below the moving average. And as of today, it looks like right at the end of the day, I don't know at the end of the day, but I wasn't looking at that closely. This is actually declining now. So this should be in the positive camp. All right. So we have now turned what was a negative environment, a higher risk environment, a higher volatility environment into one that's declining. Now, the fact is that we're overbought right now, so it's not like a primo opportunity, but there is something else that's shifting, and I'm going to get into that when I get into the trends. But if you notice, we the daily chart has turned up. I'm calling that positive now based on the trends. We have a positive trend and we have a declining volatility situation. The negative right now is that we're pushing extremes on an overbought level. So we could just pause at 2-3 days and bring this down to neutral, and that would be good enough for me. What I've been telling my subscribers is not to be overly consumed about the indexes. Look for entries in individual stocks. I think that's going to be your best bet right now, because it's possible that we're just going to linger here and it'll just kind of keep drifting up. So one group might be down one day and another one be up, and it keeps the index from going down. So that upward drift, I think, is somewhat important. Now, the other thing that I think is important is when we look at the weekly average true range, it's actually still declining. This moving average is definitely still declining. And even though this has popped up above it, it has it at neutral right now. But if it keeps doing what it's doing, this is going to drop right back down below, and this is going to be declining. And then we're going to be in a situation where we have a bullish environment here from a volatility standpoint, and then a continuation of the bullish environment we've had pretty much this year, except for this drop, which caused the volatility to grow. Now, it's still something we got to watch really closely. If we go back and look at what happened back in 21, you notice how it crossed over and then it just kind of pulled back a little bit and held it while this was cupping around. So we have to be on the lookout for that. If this plays out like that, if this ends up doing what this did and the volatility goes up as this is climbing up, so price starts to climb here, but we have increasing volatility, that sets up a very negative start to the new year, something we're going to have to watch incredibly closely. All right, I want to get into the trends now, and let's get into these patterns. So we talked about last week how we had formed the 1 and the 2. All right. And we were coming up against the 18 here. On this time frame, we had formed the 1 and we were hoping we were going to get a 2. See how we were looking for this to pull back just a little bit more to form. So I usually say if we're going to form a 2, it's usually it needs to come in to around 30, a 1/3 retracement as a minimum, 1/3. All right. Now, sometimes when it's really strong, it could only be like a 30% retracement or something like that. This doesn't even qualify as any real retracement. However, I think we have to take something into account here. All right. We had a move to the upside with a lot of dynamics behind it. Very, very strong price action, gaps left and right. Look at these gaps over and over again, gaps everywhere. And then we get a reversal bar. All right. Let's just look at price. We get a reversal bar. And the next day we open up, push down a little bit, and then just drive up for the rest of the day and take that out to the upside. We just destroy this bar in one day by immediately breaking back above it. So it's very rare for one day to have a lot of meaning for me, but it told me pretty much everything, and it confirmed what I was thinking based on the way we got more bearish at the low and what I was hearing about the increase in the cash levels in a lot of the mutual funds and some of the money managers. And so what ends up happening is these guys raise cash at a low, and as it turns back up, now whenever there's a down day, they're usually taking advantage of it. I've seen this happen now for literally 30 years in my career. When you get a move like this off of a low and it just won't pull back, what this is telling you is that guys got bearish, guys raised cash, and now we're going into the end of the year. They can't be left behind. If this market's going to keep rallying, they can't have cash levels of 10 or 15%. They have to put the money to work. So that is what's taking place. That's the reason why this thing continues to drift and push higher. Obviously, it was helped by a CPI number that was much better than expected. But I'm just telling you, generally speaking, this is what we're seeing. When we see this kind of a pullback that doesn't follow through, now I got the confirmation, okay, that's exactly what's going on. Any kind of weakness is being taken advantage of, and they're basically in a chase to try and get invested. Now, that doesn't mean, now that we're up against this high, it doesn't mean we can't pull back or pause or whatever. I'm just telling you, based on the time of the year and where we're situated and how this was reacted from the low, remember, this was a pretty strong bounce off the 18-month line. This was also a pinch play, all right? And we had essentially a doji bar right at that 18, and now we're taking that out to the upside. So this is triggered as a pinch. Now let me show you what's going on a MACD basis that makes me feel like there's a chance that this could push higher for now. And that is, we have the pinch on this time frame. We have a zero line reversal on this time frame. And on this time frame, we had divergence. This made a double bottom. MACD made a double bottom here, and this made a significantly lower low. So we talked about it a little bit. We also talked about the fact that that MACD signal was muted somewhat by this, so that we didn't expect this to just skyrocket to the upside. However, we have to take the tape into account. The tape is important, and there's one other thing about this day that came right back above this red bar that I was talking about, and that was it sliced right back up through the 18-week. All right. So what we were talking about last week is could it fail at this 18-week and then cause this to consolidate? Well, it pushed right up through it like it wasn't even there. So you have to start thinking we're working our way up into this resistance zone, and then we'll probably consolidate some, pause, work sideways, something like that. I mean, it is possible we'll go to a minor new high before we start to retrace. But what I'm telling you is the bias has shifted to the upside based on this pinch play and all the MACD sequences working together here. And then there's one other factor, and that is we talked about last week, the strength of this move to the upside. All right. Now, if this was getting ready to turn down and that we were going to get a better correction, then we're going to see signs of sellers showing up, and they popped up and then dropped right back down, held the 40 and then went to another new high. And then look at the strong reading we got. I know a lot of people would view this as divergence. I don't really see it that way. We're so strong. We're holding above the 25 level, even during correction phase. This is a very strong trend. All right. So until that changes, until the hourly gives it up, I wouldn't be looking for anything significant at all to the downside. And it's very possible, even when that happens, it'll be more of a sideways drift and just a minor pause, maybe fill in this gap or something like that. So don't necessarily be on the lookout for a huge decline right this second. Now, here's what I'll tell you, and this is how I feel. As long as we stay above the 18-day and the 18-week, this is in a very, very strong condition pattern. We've got kind of everything working for us. We can pull back. We could even have a couple bad days in here. But if we stay above these two lines, I think we got to have a lot of respect. So the 18-week is 438. And we could maybe bleed back below that a little bit, but we don't want to re-break the daily lines. And those lines are going to start rising. And within a day or two, they're going to be right out where the 18-week is. All right. And as long as we stay above those two lines, I think we're at a pretty strong condition that probably, and it's possible it could lead us to the end of the year. I don't think that's how it'll play out. I think we'll run into some problems here, consolidate some, and maybe just finish off with a little Santa Claus rally or something like that. But keep playing it week to week. We don't need to be forecasting or anything like that. Right now, I would be looking for individual stocks that have a very similar strength but have pulled back and given you a little bit of opportunities. That is happening out there. We're seeing it for sure. So take those opportunities when you get them. I think the bias is to the upside. Now, I don't know that this is going to turn into a multi-year uptrend to the upside, but for now, the short-term pattern is up. The intermediate term pattern is starting to show signs of a reversal based on what the MACD is doing and the fact that we're back above the 18-week. All right, let's see if this plays out like this. If we make a move up and then pull back and then turn up, then we have a failed 1, 2, 3. You see how this would be a 1 and a 2? If we do that, especially in a zigzag form, and we do that, that would be incredibly bullish. All right, so we got to be on the lookout for that. But right now, I would just stay focused on what's taking place on a daily chart. Until if we keep keeping the volatility low, then you gotta have an upward bias. All right, that's the update for the week. Let me know if you have any questions. Thanks.